Hey guys, and welcome back to a new trade recap. Today is the 8th of November. It's a Tuesday, and today I scalped during the London session. So let's get started with the trades and what did the trades look like and everything. So I've been trading as most of the time usual the E-mini S&P 500 futures contract because according to my backtesting results on US 30 and S&P 500, this is the pair that generally likes to move during the London session. Of course, GBP USD and the Euro US dollar would also work well, but I try to stick to at least one chart so I'm not over confused and taking too many trades per day. So I'm currently sticking to the S&P 500 futures contract. Alright guys, so let's get started. The first trade, getting into our 2 a.m. New York local time London session kill zone opening, we got a bearish candlestick right here. The Scalper Pro turned bearish just on this candlestick. And with the next candlestick, we broke out of the Scalper Pro here to the downside. And the stochastic RSI was already very close to the oversold territory. But I still took the short because the London session likes to, for example, trap people short at the beginning. So create a false move before taking off in a completely opposite direction. So it's pretty simple. I took the short after I saw the Scalper Pro breakout, and usually, even though the stochastic RSI is oversold, that sometimes does not mean that as soon as it's oversold, it's gonna bounce right back up. I mean, we saw what we got here. Went into the oversold area, went back above 50, but we kept rejecting here on the VWAP here, came back below, and that's when we hit our take profit right around this time for a 2-to-1 risk reward. It was a very close call, but I made it. It hit my take profit, so all that was very good. And then afterwards we started to form a bottom, which happened to be the current low of the day. So far, as of New York session right now, we did not breach this low, so this could be our actual low of the day that happened here. And afterwards, we got another short entry after the stochastic RSI, called back up into the overbought area, crossed over, and we were below the VWAP. The Scalper Pro was still bearish, so I entered into this trade. But within 5 minutes after placing my stop loss here on the most recent swing high, I've been stopped out. And I'm very glad that I have been stopped out, because if I'm wrong about the direction, I want to be outside of the market as fast as possible. As fast as possible. That's my most important rule. Shortly afterwards, after I got stopped out on this trade, so making 2% profit here, losing 1% here, I didn't want to give up so easily. And because we had our previous daily high sitting right here, roughly at 3827, I wanted to see this level breached. And eventually we breached this level after getting very close to it, pulling back, continuing with the initial trend, we breached the level. So right around here, still during the London kill zone at 4:20 a.m. New York local time, we had our stochastic RSI crossover, and our Scalper Pro just turned bullish. So after I saw this, I placed my stop loss right here on the most recent swing low, looking for a 2-to-1, which has been hit within half an hour, 1 hour maybe. It hit my take profit, I set my take profit, I set my stop loss, and I walked away from the screen, and that's the best thing that you can do. And this strategy allows you to do so. You don't have to be sitting watching the price action in front of the screen. You just gotta wait. Right after the London session, after we hit take profit, we pulled back another time. I wanted to enter, but I'm sticking to my rules that I'm only trading during the London session. This could have been another entry for a simple 2-to-1 within this high and this low. So this would have been a very simple trade setup, all according to the rules of the strategy. Let's have a look at the New York session so far. So we see we broke the current day high that we created here right around 7 a.m. in the morning. This is the previous daily high that we already broke here at 7 a.m. in the morning. And now we're continuing in our making higher highs and higher lows pattern. So ideally, to maybe take a New York session trade, what we want to see is a continuation move, price pulling back, crossing over bullish again, and continuing with the trend. But of course, we could also see now that we breached the daily high, we're either gonna pull back and break out, or we're gonna pull back and reverse, leaving all those people that went long here, 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 and are still long, basically, yeah, trapping all this long volume very high up there just to move the market down short. So the smart money traders make lots of profit. That's basically what I would be looking for today during the New York session. But I think I am going to sit out since the London session worked so well today. And yeah, if we go back to yesterday's London session, we had a beautiful, beautiful London session. So first of all, we broke out of the Scalper Pro after having a very, very, very tight consolidation. We broke the Asian session high right here, continued with our consolidation, and we received the Scalper Pro breakout signal right here. Even if you would have missed it by one candle, I think you should have been still alright. Here's our swing high, and our take profit would have been a 2-to-1 risk reward. Let's see if it would have got hit. No, so this wouldn't have worked if you would have waited for one more candle. That's why it's so crucial that you practice perfect execution. And good question actually, how do you do that? When I wake up, I usually go in front of the charts and I pick one random pair. It could be the E-mini S&P 500, it could be Euro US dollar, it could be any asset. I am just trying to simulate the strategy. I use the replay feature of TradingView and I click through every candle and I'm trying to simulate how I would feel during the trade, what's happening, how volatile is the market. Just getting a sense for the strategy. It is so crucial that you can see the opportunity right here and take it. I mean, we have been crossing over bearish and bullish here all the time above the 50 level. So now both the K and D line moved below the 50 level, and that was a pretty clear sign for me to take this thing short, that this thing wants to drop short and maybe fill some of those volume inefficiencies down here. If we use the volume profile, we will see that most of the volume is being trapped up here. So what did they do? They moved it down here into this volume inefficiency, those fair value gaps, if you want to call them like it. For example, this one here. Filled it, created the daily low, continuing with the rally all the way to the top. Unfortunately, I missed out on this move because I did not get a signal in this uptrend here. The stochastic RSI has been basically bullish and then afterwards bearish the whole time until we got that crossover right at 5 a.m. New York local time, where we crossed over. That's really what I wanted to see. I mean, you could have said we already crossed over here, but I'd like to see some sort of a bullish engulfing. So I think I entered here, but only with a small position, and then I added size to my position as soon as I saw this next following bullish candlestick, and for a total of a 2-to-1 risk reward trade. So sometimes if you're not sure, it's also still valid to maybe only enter with 50% of your usual. For example, if you always enter with a fixed lot, a fixed standard lot, it would be more than valid to say I'm going to enter with half a lot on the first candle, and if the second candle already goes into my direction, I'm going to enter with the other half of the 50%. Of course, eventually you're going to make less profit, but it's still valid. You saw the idea, you took the setup, but yeah, you reduced your risk, let's say at least a little bit, because it wouldn't have, price action wise, it wouldn't have been very clear that we continue this way. But timing wise, if you think about timing is very crucial. So basically what happened here, a new hourly candle opens. So hourly traders have been triggered into the market. Those hourly traders here have been trapped short until 3 a.m. New York local time. What's happening at 3 a.m. New York local time? A new hourly candle is opening. And this hourly candle is a massive bearish hourly candle compared to the previous doji, wicks, whatever. So lots of hourly traders entered in short at 3 a.m. New York local time. So those traders have been trapped short. What happened with those traders? They got liquidated very, very quickly within the 3 a.m. London session equity open. So 3 a.m. reversal until 4 a.m. and then we consolidated from 4 till 5. So what do people see? They see a bearish candlestick with a bullish engulfing on the 1 hour chart, followed by a doji, a inside bar, and then a new hourly candle opens up. So I expect like the market to continue into its direction for maybe a 1 to 2 or 3 hour move. And that's exactly what happened. So within the next hour from 5 to 6, we continued into the with the initial trend direction. That's how you can use the lower time frames to get more information than if you would just watch the 1 hour time frame. On a 1 hour time frame, all this information would be hidden from you. But if you use the lower time frame with the higher time frame in the back of your mind, so basically saying, okay, where is the next hourly candle? Where's the next 15-minute candle closing? And what would it look like for traders on a hourly candle? I just see. So now me talking about it makes way more sense than me actually watching the market. If I would have seen this volume inefficiency filled like that perfectly, yeah, I would have taken it straight, because this was also a reversal opportunity here, right back into the band. So that's a mistake I made. This was a beautiful trade opportunity. We filled this last volume imbalance, this fair value gap, made a bullish engulfing candlestick. Even if I would have entered on this bullish candle, I think it would have still been a very valid setup. This would have been the early reversal entry if you're taking those, a high risk setup. But I mean, it paid off. It's not working all the time, and I'm trying to stick to my strategy and not to take too many trades that do not match with my parameters, with my strategy rules. That's really important to me, so I did not make any money on this trade. But I have been patient. I waited for 1 hour. I did see nothing happen. No stochastic RSI cross here, not a significant one. And so I waited until 5 a.m. New York local time. And what happened? We got this stochastic RSI crossover. On the next candle, we would have been inside our blue band here. So we would have been above the 20 level. So if you wanted to play it safe, you could have simply waited 1 more candle and take your 2 to 1. And if you're not sure if the market is going to trend so much, so let's, for example, say your 2 to 1 risk reward ratio, take profit, would have been somewhere here above. This should have been Friday's high here. I'm pretty sure, yeah, that's Friday's high. So if you're not sure if the market is strong enough after the London session to like basically break Friday's high, go for a 1 to 1.5. It's very simple. But if you're sure it's going to hit your 2 to 1, or maybe, for example, if it's hitting 1 to 1.5, take some profit off your trade. Close 50%, move your stop loss to break even, and in this case it would have worked out and hit your 2 to 1 risk reward. But in case something like this happens during New York, you would have been protected and you wouldn't have lost any money. And that's basically the goal for every trader, to not lose their capital. It's not really about generating capital, it's about preserving your capital. If you're not losing, you're already doing something right. If you're not losing, and I mean, if you're not losing, it's basically inevitable for you to not make profits. If you're not losing, you must be doing something right. Alright guys, that's it for me for the E-mini S&P 500 futures contract analysis.